Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We're going to talk livestock slaughter or beef cow slaughter, and we're also going to talk a little cattle on feed today. And that's really about it. But to kick things off, let's recap what happened this week in the markets.
Yeah, this week in cattle markets, Megan, fed cattle were $2 higher on the week. Those feeder cattle markets were lower this week, down $6 to $8. Live cattle futures contract was down $2.15, and the November feeder cattle contract down hard as well, down $8.85 this week. Choice box beef was up 3 1/4 on the week. On the hog side, cash barrels and gilts were lower this week, down $3.15. December lean hog futures were also lower, down $3.50. And the pork cutout value also went lower, down nearly $3.90. We had weakness across the board in all those pork cutout components.
It really has been sluggish, not great, in terms of pricing and markets for both cattle this week, but really for the last couple of weeks, the cash hog market and the futures really have been under some pretty significant pressure.
That's true, and I think in the case of pork in particular, it's what can we do on the demand side here. Yes, we're talking about more supplies, but certainly have changed the demand outlook as we look at where we are today relative to a year ago.
I don't want to get too far ahead of us, but thinking about that, is there potential to spark maybe a little bit more domestic demand if we see pork a little bit better or more competitively priced at the grocery store? Does that help at all?
That's a really good question, of which I struggle answering all the time. But I think the answer lies in, again, this notion that we eat more away from home than we eat at home, and the restaurant choice matters to what meat protein we put on the plate. So I think there's less responsiveness. So even with cheaper pork prices, we aren't getting the same substitution away from very expensive beef towards pork that we might have seen in the past.
All right, let's take a look at slaughter numbers and run down how cattle and hog slaughter numbers compared to the recent week.
Yeah, for the week ending October 21st, USDA is going to tell us a run of 638,000 head of cattle this week. That's 21,000 head above what we ran a week ago, but down 37,000 head from what we ran last year. On the hog side, a run of 2.61 million head of hogs this week. That's 1,000 more than what we did last week and 40,000 more than what we did a year ago.
As we look at those numbers year to date, how are we comparing?
Yeah, we're down 4.6% in terms of cattle slaughter year to date, while hog slaughter is up 1.4%.
All right, livestock slaughter numbers out this week. Just two big reports for us to get into. First, as we take a look at beef production for September, very interesting looking at those numbers compared to year ago levels.
Yeah, that's right. So September 2023, 2.1 billion pounds of beef produced in the United States. That's down 10.1% from what we did September a year ago. If you look at some of the other numbers, cattle slaughter down 9.9% September of this year relative to a year ago. Beef cow slaughter down 11.2%. I think that's really the driver of what we're seeing is in terms of lower beef production. On the pork side of the equation, we're also lower on pork production for September of 2023. That's 2.2 billion pounds of pork produced this September. That's down 3.2% relative to what we did a year ago.
When we take a look at beef and pork production year to date in this country, it's kind of interesting to look at them side by side.
Yeah, that's right. So just to give us a little comparison, in 2022, we produced year to date 21.2 billion pounds of beef and 20.1 billion pounds of pork. So a billion pounds more beef. Fast forward to this year, year to date, 20.2 billion pounds of beef and 20.2 billion pounds of pork. So pork up slightly, but but beef production, as we all knew, was coming down to where we're producing the same amounts of those two products year to date this year.
Scott, we talk a lot about beef cow slaughter, and while we did see some declines this month, I think it probably needs to be said too that we're also drawing from a smaller herd. How does that maybe indicate, because that's one of the things we talk about in terms of, are we starting to see some herd rebuilding happening in different places?
Yeah, so when you look at year-to-date beef cow slaughter, we're down 13.1% relative to 2022, which just at face value might say, oh, well, we're starting to think about rebuilding the herd. And I think your point about, number one, we're starting with fewer cows January 1 of this year relative to January 1 of 2022 is a piece of that story that says slaughter wasn't going to be as high. I think, secondly, 2022 beef cow slaughter was phenomenal. And so I would have anticipated us coming off of that very large run that we had in 2022. Now, I think there's some parts of the country that would say, hey, 2023 runs have been even larger than what we did in 2022. And I go, yes, those areas of the country where drought was even worse this year, I think slaughter was more affected than other parts. So I'm again, all in all, I go, to me, this is not a strong expansion number yet, but what's one we're going to keep watching.
I would assume I'll also have to watch closely that report that comes out in January for a little bit more indication.
That is true. I'm curious. I expect we'll be down in terms of beef cow inventory. I'd be shocked if we're flat at this point yet.
Cattle on feed numbers out today, and I think at first blush, when we take a look at those placement numbers, everybody's jaw might have dropped a little bit. Let's run through the numbers in this month's cattle on feed report.
Yeah, so if you look at so I'm gonna talk on feed first. On feed October 1, 100.6, so up 0.6%. That was a little bit of outside the upper end of the pre-report estimate, but closer. Reminds us that we're roughly at the same level of inventory on feed as we would have seen last year. Pretty strong growth in on feed numbers, because we would have been back in September on feed a little more than 11 million head. We're now sitting at 11.6 almost in this report. The number that's going to get folks' attention is placements. Placed in September came in at 106.1. Interesting, when you look at the pre-report estimate, the range was from 95.9 to 104.8. So we had a lot of experts on both ends of the spectrum of down or up relative to a year ago. But USDA tells us up strong at that 106.1. When you look at what we got relative to last year, I just remind us, so we placed about 2.1 in August of 2022, and we also placed about 2.1 in September. So we were flat. That's not traditionally what the seasonality would look like. Normally September is above August. And what we got in this report is more of that normal seasonal pattern. We placed roughly 2 million head in August of this year, and now we're placing 2.2 million head for September. So maybe we just got back to more seasonal. I'm sure some are going to look at that and be pretty negative about cattle prices as a result of the report today.
Let's talk a little bit about some of the things maybe that you're noticing and your takeaways from the report. We already touched a little bit on the weather situation, but I'm assuming that's coming into play here as well, and talking about those placements compared to where they were a year ago.
Yeah, so when you look at some of the placements by state numbers, I think they start to bear out some of what's going on. So Texas up 55,000 placements for September. I think there you can talk about Mexican cattle being a big part of that. Kansas up 60,000 head. Again, I think there you might actually find some calves. Maybe we're trying to move a little bit sooner to feed yards in Kansas, just given it's still pretty dry in many parts of Kansas. Nebraska up 20,000 head. So combination of imports of feeder cattle combination of dry weather that maybe made us shift some calves sooner, just trying to get cows through the winter. Might have been part of what we see out of this bigger number that we got today.
Scott, when we take into consideration last week's supply and demand, kind of the numbers that we've got this week with livestock slaughter, cattle and feed, what are your thoughts about risk management, about planning, and what 2024 is going to have in store for us?
Well, from a cattle perspective in particular, I keep saying now's the time to protect some downside risk at what are historically high prices generally. I mean, we can argue about whether we're at records today or not, but near records. And I'll say you want to find that risk management tool where you pay the premium and don't get the indemnity payment. You ought to be happy with that outcome. And yet I think some are gonna not like that. But I go, if you don't get the indemnity, that means cattle prices went higher. I'm just seeing a lot more downside risk when we're at these lofty prices than upside. I hope I'm wrong and cattle prices keep moving higher. From a supply and demand standpoint, I think higher is the right answer. Just the downside risk worries me. We're going to get focused on South American plantings from a feed standpoint. So where corn prices go, I think have a lot to do with ultimately what happens in Brazil in particular. I'm hearing some news out of Brazil that there's going to be less acres of corn planted than maybe we would have thought a few months ago. That might tighten up the S&U a little bit for corn. So maybe there's some risk management that can also be done on the feed side of the equation for these producers to think about.
As you talk to producers in your area, what are you hearing in terms of crop production? I think it's really interesting. Variability has been the thing that I have heard the most. My dad would be mortified that I'm going to share this, but like record soybean yields on our farm in a year where he would have never thought. And I think there's been a lot of surprises. I know there's some really drought-stricken parts of the country that don't have that, but I think there's a lot of people who are surprised as well. What are you hearing in your part of the country?
Yeah, so I just today, one producer who said corn was better in our fields than we thought it was going to be. And I hate to say that too loudly because I know I have neighbors who struggled to have a decent corn crop. Another producer who told me, Scott, our best ground had the lowest yield and a mile away, a field that wasn't as good from a productivity standpoint, had much better yields because that field got rain when the other one missed, rain. So this idea that you don't have to move but a mile or two and you can go from good corn to bad corn. Generally, I keep hearing maybe soybeans are better than anybody thought they were going to be early on. And perhaps the August rains that we got in this neck of the woods really helped more than folks thought to get those soybeans to the finish line.
I think it's going to set up for a very interesting conversation as you and I have conversations through the winter about risk management or where the herd goes from here in 2024.
Yes, absolutely. And when do producers feel good enough from a feed standpoint, a pasture standpoint in particular, to really start talking about, I'm ready to expand? We overlooked out of the cattle on feed report today that we did get heifers as a percentage of total on feed. And just to remind us, still 40% of on feed inventory are heifers, which just keeps saying we're not building the herd. I do hear places where I think some are trying to hold back more cows right now, or build cow herds, I should say. But there are a lot of places that aren't very interested in adding cows to the mix right now.
Scott, always great to see you as we look ahead to next week. Cold storage numbers. What are your thoughts about that report?
Well, I think we should just keep watching what happens, maybe especially on the pork side, as are we building inventories that become more troubling for the pork industry as we begin to think about wrapping up 2023 and getting started into 2024.
Todd, always great to see you.
Hey, likewise, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And for a daily rundown of what's going on in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.